We have with us, as always, Mr. Sanjiv Bhasin joining us on the show. Hi, Mr. Bhasin. Good morning. Good to be speaking with you. We're all discussing about the metal space. Over the last week, it has had a very solid run. But today, CLSA has gone ahead and downgraded the likes of JSW Steel as well as Tata Steel. Do you think they are a bit too conservative and early in downgrading, or do you think the rally has played out?
Yeah, good morning. So, Anisha, take a couple of weeks back where I've been telling you that the dollar is headed lower and the China comeback will see metals do well. We've seen that there has been no capacity addition. And I think the way nickel, copper, all both ferrous and non-ferrous are performing, this could be a very, very sweet time for metals, particularly commodities, particularly metals. And we remain extremely bullish on this space. So there will be upgrades, downgrades at new highs. Who thought Tata Steel will be 165 from 100 rupees in the last 6 months? And I think right now, sale is the new gale. So you can imagine the left out feeling. So we continue to be very optimistic. Our dark horse play there continues to be Nalco and Nalco, JSW and Vedanta. Vedanta has clearly outlined a reduction in debt through internal cash flows. And if you see the sum of businesses which they have, from Hindustan Zinc to Balco to anything to do with silver and Sisago notwithstanding, they are in an extremely sweet spot as the going goes. I think Vedanta can clearly be a very big dark horse over here. So we are overweight this, and any decline should be used as an opportunity to buy. And as a disclosure, both Nalco sale, Vedanta, and Tata Steel are in our portfolio, and JSW are in our portfolio.
Right. Sanjeev, hi, good morning. Other than the steel names, tell us, given your prediction is that it's going to be a volatile March, what are the other stocks that you are keeping on your buy list?
Yeah, good morning, Aisha. Yes, you are reminding me every day as we go higher. But yes, that's where the caution lies. The Ides of March closer to 10th, 12th will be difficult, and there will be a much needed correction. Now, how long that stays, we don't know. But from such levels, you will see an inevitable correction as a lot of good news gets priced in. But right now, enjoy the party because there has been pessimism at its highest from the FIs, and now with GDP numbers and Nikkei hitting 40,000, I think equities are in a sweet spot. Plus, like I said, dollar and bonds are headed lower. Aisha, we are very optimistic on the oil marketing companies. And this is a permanent business which is going to stay. So HP, BP at these levels after a sharp correction are very good buys. Our dark horse play is AU Bank. I think AU Bank can be a surprise candidate, and Bank Nifty is looking extremely poised to hit new highs. So AU Bank, given its pedigree in smaller states where they are expanding their credit franchise, and I think deposit franchise for them as a CASA ratio will start to see accretion much before the large cap plays. We also like Patanjali. Don't miss the rural play which is coming back first in autos and now in consumer spending. I think Bata and Patanjali continue to be very, very good players with a 3 to 6 month view, which can generate very, very good alpha over a period of time.
Okay, let's see whether Patanjali creates that alpha or not. But what has been creating a bit of alpha of late is the pharma stocks, Mr. Bhasin. Aurobindo Pharma, Suven Pharma, they were locked in the circuit as well on Saturday, the 5% circuit on low volumes for what it was worth. But then there are positive news flow which are backing this. Aurobindo Pharma today has also a positive note coming in from Phillip Capital, wherein they have raised the target price to 1400. And for Suven, that deal clearly got a thumbs up from the street. Are you tracking these two names closely?
Anisha, we've had Aurobindo from much lower levels, closer to 650, and it's been a stellar rise, particularly in the injectable markets. Right now, for us, two overweights are Ipca Lab and Biocon. We think these three, coupled with the large caps, Cipla and Dr. Reddy, they make a perfect combination. Lupin has been another one of our stellar plays all the way from 750, and we think the new, generic markets for them is now going to create even more space. So to sum it up, it will get confusing for most investors. The best thing to buy is the SBI Pharma Fund or the Nippon Pharma Fund, Mirai. These three have a good portfolio. They have a very active fund management team. And I think if you buy, from logistic or lab oriented to pharma, generic, if you buy a mutual fund, you'll be in a sweeter spot, which is tracking the whole gist of 8-10 sectors in the pharma space.
Mr. Bhasin, what should one do with respect to real estate right now?
So stay invested, but take some chips off the large caps like DLF and Godrej and buy India Bull Real Estate. As a disclosure, that has been our top pick from 85.90. It is just hit 120. Embassy arguably is the largest real estate executor. It can do 1 lakh crore of order book in the next 2 years. And now with this merger being given the red signal, given the green signal by middle of March, I think once Embassy has control over India Bull Real Estate, you can't get a better pedigree to play the the reality sector. As you are aware, the market cap of 6,000 against an inventory which is arguably the fourth largest in Maharashtra and Delhi and NCR region. I think India Bull Real Estate is a must-have in your portfolio. For us, that's the dark horse which we want to play on the real estate side because the market cap is giving us sufficient amount of comfort for an upside. Yeah, good morning. Awan, I think Bajaj, both the twins have been on a weak wicket after that, QIP they did. And when knowing fully well that there was some ambiguity on the SEBI order on further business, they went ahead with that. And, it was one of the, it met with a very poor response, not on the actual size, but on the feedback from the company. So I think that they are on a weaker wicket, as you're aware that prime lending in IPOs and other spaces is seeing a backseat. And Bajaj Finance, for whatever reason, both those twins are under pressure. I don't think there is going to be any comeback very soon as the market shifts towards better names in the private banking. So I think both the Bajaj twins are going to remain under pressure. And now with the RBI and SEBI being very stringent on certain practices, and I'm not saying Bajaj is part of that, but there will be a lot of stringency on observations and procedures. And because of the mass scale lending, which most of these NBFCs do, there can be some more pressure over there on adherence.
Yeah, absolutely. And we've seen the clampdown and very stringent one as one at that. Sanjiv, as of last evening, it was JM Financial. I mean, I'm sure we'll see the impact come by on stock prices as well. But in terms of a market sentiment, what would you think it would do to maybe overheated pockets like small and mid caps? Do you think we will see a sizable correction or profit taking come by there?
Well, Aisha, like I said, beware the Ides of March. I'm not sounding ominous, but yes, there is a much needed correction in the market. Large caps is where I want to protect myself. The correction may be, more in mid caps, but you cannot leave the market as a whole. And we've been suggesting that HDFC Life, ONGC, Vedanta, these are some names. But on mid caps, be very, very cautious. This unprecedented rally and now the flow of money and now this SEBI observations are all telling us that leverage may be over there, not leverage in the shape of the derivatives, but leverage in the shape of co-lending and taking collateral, because a lot of people have, NBFCs particularly, have started co-lending and so on. So that could be a little bit of a worry, and the valuations are not in sync with a large part of the market. So we think private banks, the stocks which we named, HDFC Bank, HDFC Life, Vedanta, ONGC, these are very, very sweet spots to be in. And for mid caps, it is just about right time to take some money off the table. And like I said, the second half of March can be volatile with a downward bias.
I just want to get you in on that as well, in terms of your opinion as to what the second half could hold. Is that a sort of trend that you're observing as well?
Yeah, I think we've already started that trend, Avan, that the mid caps and small caps are showing signs of underperformance. The large caps are the ones which are where the markets are more heavily dependent upon. And I think we've seen that in this kind of a phase historically, that portfolios, they tend to underperform because it becomes very difficult to shift these kind of mid caps and small caps immediately towards large cap names. So I believe that we could probably be at a point where the mid caps and small caps could underperform. In fact, for the first time, if I'm not wrong, over the last 2 or 3 weeks, when the Nifty had made a new high for itself, initially breaking past about 22,200 levels and then now surpassing 22,400 mark, the mid caps and small cap indices are still shy away from their previous major swing highs or 52-week highs for themselves. So that itself tells you the speed of underperformance. We've already seen the PSU basket, a pocket which was extremely charged up over the second half of 2023. those indices and many of the stocks from that index have already corrected by a margin of 15% on an average. Some of them have corrected by 25-30% as well. But I would believe that that's a kind of price action which we would probably anticipate for the mid caps and small caps broadly. So a 10-15% correction from the previous swing highs for mid caps and small caps could be due.
Okay, let's move on and let's talk about some cheer that came by as well yesterday and a big boost for Indian money markets. Bloomberg Index Services will include now Indian bonds in the Bloomberg Emerging Market Local Currency Index and related indexes as well in a phased manner come January 31st, 2025. Anurag is here with more details.
Bloomberg has become the second financial index provider to include India's bonds in its debt indexes. So Bloomberg will include the Indian government bonds in its emerging markets local currency indexes, and this will be from Jan 31, 2025. Now, the inclusion of Indian bonds will be phased out over a period of the following 10 months, and by November 2025 the full value weightage of Indian bonds in the Bloomberg indexes will be added. Now JP Morgan had decided to include Indian bonds in the debt indexes in September last year, and the JP Morgan's decision to include Indian bonds had led to forecast that about $21 billion would come into Indian debt markets through that move alone. So the weight of the Bloomberg, the inclusion in the Bloomberg indexes will be increased by 10% every month. This will be until October 2025.
Anurag, thanks very much for those details and perhaps quizzing as well the Reserve Bank governor on some of these parameters. But meantime, Sanjiv, pretty positive notes coming in when it comes to the entire tourism space, saying that all the ingredients are in place for a sustained growth and the key beneficiaries will be across the board, be it IRCTC, Indian Hotels, Ease My Trip, VIP Industries, etc. That's from BOFA. What are your thoughts and where are your preferences?
Yeah, one, firstly, on the Bloomberg inclusion of index, now that becomes the second large, rating agency or institution to, up the ante after JP Morgan index. It means that some of the power lenders, particularly REC, PFC and NTPC, they have sovereign bonds which will actually see their yields fall sharply, which is very, very sweet for them as lending becomes easier. And for banks as a whole, particularly large cap banks, I would think re-rating will be very much on the card as cost of money falls. On the tourism side, it's up and running. I was just traveling yesterday again, and like I said, flights are going chock-a-block. Indigo becomes a proxy to that. Hotels are seeing the maximum amount of average revenue per rate per room, which you have seen, and I've been traveling for a long time. I can tell you, even in tier 2, tier 3, it is right through the roof, which means Indian hotel will be actually laughing their way. But it's also a large part of that is in the price. I still think stocks like Ashok Leyland, which are proxy play on the bus market for the Indigo side, we think that your Indigo, again, that becomes a very good proxy play. And across the board, anything to do with entertainment, that part also becomes a very, very big proxy over there. But for us, Indigo and Ashok Leyland and Indian Hotel in this format are in our portfolios. We are very, very overweight, particularly Ashok Leyland, which I think can be a dark horse play for 2024.
Sanjiv, what about Tata Motors? Now it's going to be eventually a demerged entity as well, with the passenger vehicle segment hived off into one and CVs into the other.
Well, Aisha, it has actually taken your breath away, and that is what the markets are all about. Big is getting bigger, and if you thought autos were expensive even 3, 4, 5 months back, they've come back to surprise. Bajaj Auto and Rajiv Bajaj now saying that 12,000 is a fair value and a conservative person, and Tata Motors is actually taking the icing on the cake. So I think both of them have performed brilliantly, and I still think that now it's the time of stocks like Maruti, Ashok Leyland, Motherson Sumi, which I've been saying for a long time, has also hit a new 52-week high. Our preferences lie there. On Tata Motor, I would say that don't wait for the demerger. the deleveraging will still be there because there is leverage on the books. So part profit should be taken in this process of markets re-rating, I think.
Okay. Let's also get in your thoughts then, Sanjeev, as to what the outlook is when it comes to the entire oil and gas space, owing to the fact that we're also looking closely at the likes of an MGL with respect to the CNG prices that have been slashed. How are you looking at this entire space?
Well, Avan, MGL has been on a tear. You know, it was with the IGL was at 420 and MGL was at 1,000, 1,100. It has gone to 1,500. I think there was no ambiguity as far as anything to do with the CNG, the conversion on EVs and what Delhi government had tried to propose. Hence, MGL took the cake, and it continues to be one of the best places for CNG space and PNG. I think now a large part of that is already in the price. Yes, margins will be here hurt, but volumes will make up for it. So we have a profit book on that. We would say stay away, but I mean book profits because you've had an exceptional run. We still think ONGC is the most undervalued play in the oil and gas space. That along with IOC are two of our picks, and we continue to think these will be outperformers in the medium to longer term.
It's been a pretty decent run, Sanjeev, when it comes to Zomato. Latest news being that Antfin is going to sell about 2,800 crore worth of shares at a 4% discount. Your thoughts?
Well, Zomato has been a cheerleader in the whole fintech stroke, basket of unicorns, and no question. But like we said, these Ant and the soft banks of the world are under pressure globally on a large part of their assets. And if anything, to shore up their dividends or use the money for their own buybacks, part and parcel of that would be there. So I think Zomato has been on a tear and hitting new highs. We have Zomato in our portfolio. We are not upping anything. We are staying put with that. But I think this will be part and parcel of the private equity investors exiting and buying back their own stock or reinvesting, raising liquidity, which is part and parcel of the whole process.
We've got Sanjiv Bhasin as well joining in on the show. Sanjiv, hi, morning. A 15% knock on MGL alone. Do you think that this is perhaps a good dip to buy into any of these names?
Good morning. Aisha, you said a 15% dip, but you didn't say that in the last 4 months it's up 50%. 900,000 is also at to 1550. So yes, now you are aware of some of this government intervention, the price of gas falling sharply overseas, which means ONGC's subsidy account will get less. So I would rather be with an ONGC. I think City Gas has had a very, very sweet run, and you will need more clarification. They can't be smoke without fire. So there must have been some event or some diktat which can come on curtailing profitability. As you know, MGL has had a dream run along with Gujarat Gas, because in their respective areas there is no competitor, and we think that maybe the prices had run far in excess. You also saw, like we were saying, in the mid cap or the semi mid cap, there was a large amount of froth which is being corrected. So irrational sell-off will be part and parcel of that. But we are saying ONGC will be the biggest beneficiary purely because gas prices have fallen and now there is no subsidy on passing on of gas, which they are the suppliers to the city gas distributor. So ONGC would be our top pick over there. But the next few days, weeks, months belong to banks. And if you recall, I've been saying private banks are about to make a move. And yesterday was actually the day of the private banks recoming. So we are very bullish on banks. We think the proxy play of weaker dollar, weaker bond yields is all playing out exceptionally well. And banks are going to be the one which are going to lead the market. So Bank Nifty is where you should be putting your money right now.
Absolutely. What a stunning comeback made by private banks, the large ones, ICICI Bank, Kotak, even HDFC Bank, to be fair, has been doing its bit, about a 0.5% uptick on a daily basis in an otherwise wobbly market. And that was quite the case with ICICI Bank as well. But Sanjeev, would you say stick it out with ICICI Bank, or would you say it could be a bigger bottom-up move, say in a Kotak or in an HDFC Bank?
Aisha, they all will participate. We are aware of the overhang of HDFC that has reduced quite a bit because of the sell-off. And now I think levels of ownership have come down sharply. The smart money has definitely bought that dip. And if anything now, it has to be HDFC. So if you are saying 50,000 is coming on Bank Nifty, then HDFC has to be the prima donna. But don't forget the other banks also. We think some of the mid-cap small banks are now going to be in action because RBI itself will be in a mode of, following the Fed over a period of time. Yields are low, inflation is lower. So two banks which along with HDFC are my top pick is AU Bank in the large caps and Dhanlakshmi and DCB Bank, where promoters have upped their stake. They have enough comfort, and I think they can be very, very sweet players once the liability franchise evens out. But Bank Nifty is headed to 50,000, which is evident from the large cap private banks just starting to participate.
As we witnessed in trade yesterday. But then let's talk about the stark underperformance, Sanjiv, that we witnessed within the entire FMCG basket. At least on a year-to-date basis, there's been a decline of nearly 6%. Lots of factors attributed to that, but do you believe that this is an interesting opportunity to buy into some of these counters, or that the weakness is only going to continue?
Yeah, good morning. No, Aman, I think it's a buying opportunity. The worst of the numbers are priced in. You're looking at lower input costs and you're looking at revival of demand. I've never seen the type of spending which has just started, whether it's high scale entertainment, travel, tourism, and now it will spread to the staple side also. So, two stocks which we are very bullish is Bata and Patanjali. We think they can be huge outperformance once we get closer to elections and so on. And these companies which are more into the distribution mode will have very, very good outlook on the rural India part. So these are two stocks there. FMCG will participate, but right now I would say it's all about banks. And so you've seen the rotation of money. But large cap banks, particularly the private ones, are raring to go. Gold, by the way, has hit a new high along with the Bitcoin. And gold now means that, the likes of Muthoot, Manappuram get more market share. And with the asset prices at a new high, their numbers will be very, very stellar in the coming quarters.
If you like this video, then like, share and subscribe to ET Now.